Hey, good afternoon. Welcome to the Real Men of Real Estate here on KCAA Radio. I'm your host today, Dan Redig, and I've got Patrick Kappell with me to talk about real estate trends and how we got here, where we're going. I think things have changed quite a bit, and there's a lot to discuss. So welcome, Patrick.
Hey, Dan, thank you for having me on today.
You bet. No, thanks for being here. This is going to be a fascinating conversation. I want to get started just a little bit of kind of how did you get into real estate? What was your thing? Because I think you did this maybe a more normal way than a lot of the people that I've had on the show.
Yeah, maybe kind of a normal way. So I went in the last 15 years, I went from living in a garage to
Uh-huh.
today running one of the most successful real estate brokerage teams in the United States and owning well over 10 million in real estate myself. So how did
Wow.
I go from a garage to that in just 15 years? Well, I was in the Navy 15 years ago. And
Okay.
one of my mentors said, Patrick, buy real estate as often as possible and never sell it. And I have lived by those words. So while I was in the Navy, I got deployed a lot to the Middle East.
Sure.
Every
Yeah.
time I came back off a deployment, I would have my savings and I would use that as a down payment to buy a property. And after a few deployments, I owned a few properties and then I started getting promotions. I bought a few more and I just kept buying and buying and buying. By the time I was 39 years old, and I take pride in having done it before I turned 40, I owned 8 properties throughout San
Wow.
Diego, which
That's
is not a
incredible.
cheap city,
No, that's a lot.
um,
Wow.
ranging everything from oceanfront homes to fourplexes by the beach to condos downtown and everything in between. And that all started on a military pension, on a military salary. And my
Wow.
wife, who by the way is a nurse. So
So
having
so
built up,
anybody can do this.
anybody can do this. Yeah. I grew up is I thought I was like middle class when I was a kid. The
Yeah.
older I get, the more I realize maybe I was like lower middle class or even kind of
Okay.
poor.
Hmm.
You don't know what you are when you're a kid, and then
No,
you look
no,
back
kids
and
don't know.
wow. But yeah, when I was a kid, we lost our house and we moved in with my
Oh
grandparents.
no. Oh
And that's where
wow.
I was when I graduated high school, living with my grandparents.
Okay.
And I joined the Navy 2 weeks out of high school. And that time in the Navy, a lot of mentors that I surrounded myself with that gave me good financial advice. And one of them was buy real estate, never sell it. So in my 30s, I owned all this real estate. I'm still in the Navy. I realized there's no better path to financial freedom than
Hmm.
through real estate ownership. And I realized most people really don't understand how to do it. Most people don't get it. So
Sure.
why don't I make it my life's mission? I've always been about service, to go get out of the Navy and help other people do what I did. At that point, I was already in over 10 years. So I stayed in the Navy Reserves 1 week in a month, just like the National
Got it.
Guard.
Yep.
And I knew I wanted to help clients, help consumers, but I also knew I wanted to be able to approach this real estate thing from an educated perspective. So I went and got an MBA with a focus in finance and real estate at UCLA. And as soon as I
All
graduated with
right.
that
That's
MBA,
really not messing around.
wasn't messing around, used the GI Bill. Thank you, Uncle Sam. As soon as I got that MBA, I started in commercial real estate, multifamily apartments.
Hmm.
And during my time in commercial real estate, I applied for a second master's degree at University of San Diego,
Oh,
a
wow.
Master of Science in Real Estate. I got accepted to that program. And it was during the time that I was getting my master's degree in real estate that I shifted from commercial into what we call mom and pop investors. So instead of 20,
Okay.
30, 50 unit
Sure.
apartments that are worth 5 million on up, I started working more with duplexes and fourplexes and mom and
Okay.
pop
Things you can get
investors.
traditional financing on. Got it.
Traditional financing, VA loan, FHA loans, conventional loans, owner
Hmm.
occupied. And I've built a team since over the last 5 or 6 years that focuses on helping really 2 types of people. One, home buyers, work with a lot of first time home buyers because there's no better real estate investment than the home you live in. I always tell new investors, if you don't own your house yet, go own a house, make your second property and
Right.
invest, because you'll get the best financing on one that you live in. And we also work with mom and pop investors, those who are buying real estate, usually 2 million and below in sales
Okay.
price.
All right.
Mhm.
But
So
by no
yeah, no,
means is
I
that
got
a
a great
limit on
team.
the VA
12
loan.
of us on the team now, and we sell about 100 to $150 million in real estate per year.
Wow. All right. And things are going well in this market. So we'll get into that.
Yeah,
Um, so the run up here, a lot of people wouldn't figure that we are where we are today. It's kind of a crazy thing to be looking at this market with higher interest rates, and it seems as solid as before we raised rates, maybe more solid.
yeah, yeah.
Rates are a little bit less, or excuse me, prices are a little less jumpy. They aren't running around as much, but everything's still moving. So, what do you think's going on here from where you're sitting watching this market?
Yeah.
And what's the deal?
So I always say that if you want to know what's going on in real estate, don't study real estate necessarily, study economics. Of
Okay.
course, real estate is a part of economics and you will study that, but you really got to study broad economics to understand how they being economics, are going to affect the real estate market. And I remember when the pandemic first hit, 2020, March of 2020.
Hmm. Yeah.
I told all of my team's clients and called all of our clients, and we said, look, you guys all need to go out and buy as much real estate as possible right now. Because if you remember the first 90 days of the pandemic, everybody's freaking out, rightfully
Yeah.
so. Lots of people are dying in the streets. But everything's under pressure. And I remembered a few phrases that I love. One is Warren Buffett's, when everyone's fearful, be greedy. When
Right.
everyone's greedy, be fearful. Baron Rothschild, who said, buy when there's blood on the streets, even when
Yes.
the blood is your
Hmm.
own. So it's in the worst of times, that is when
That's
you
where
should buy.
opportunity is. Yep.
That's where opportunity is. So myself, many of my team members, many of my clients, we went all in and started buying real estate in March, April, May of 2020. And
Okay.
by July, the market was picking back up again. And then in July, we started seeing rates come down,
Hmm.
and we told all of our clients, look, you need to do cash out refis because we're sitting around 2 or 3% interest rates. Do cash out refis, pull out as much money as humanly possible about from all of your properties, because we're never going to see rates this low again. And sure enough, that happened. And throughout 2020 and even into 2021, we're telling our clients, with the cash out refi proceeds and everything else you got, go in and buy more real estate, because we're about to see inflation like we have never seen before. And sure enough, about 6 months after that, we started to see inflation like we had never seen before. And when I say we, I mean my team, we
Okay.
knew that was coming. Um, because we're educated in economics, over 50% of the real estate agents on my team have master's degrees. Most of those are in
Wow.
economics, business, finance, and operations. And that's what we study, is economics and finance. And we saw very clearly that you could not dump as much money into the US
Right.
economy that the government was dumping in through PPP loans, EIDL loans, unemployment. So
Hmm.
much cash was being infused in the economy. You can't not have hyperinflation after that. And we
Right.
all know that the
It's
best
got to
hedge
go
against
somewhere.
inflation is real estate.
Right. Oh,
Um,
yeah. It's proven itself every time, right?
yeah. So how do we get to where we're at? That's kind of how we got to where we're at.
Yeah.
And I just, nothing has been surprising. I will say that the only thing that has been surprising is a pandemic. Everything since a pandemic. My team, as you know, we do webinars
Hmm.
and they're recorded. You can go back and watch a webinar I did 2 years ago, and it predicted everything that happened in the next 2 years.
That's got to be
Which is what
fascinating.
I love about my job, though, is we look at just the economy holistically. How does it affect real estate? And we utilize that knowledge to really live up to our mission statement. And I can be a warm and fuzzy guy if you want me to, but we're in business, so I like to be business minded. And our mission statement is very simple: make our clients wealthy. That's it. Make our
That's
clients
great.
wealthy. And
Hmm.
we do so by just giving them the right advice at the right time to make the right decisions.
Wow. All right. That's pretty fantastic. So now that we're here, what are some of the nuances? Like, what are the things that maybe you didn't expect? Is there anything that kind of was a surprise to you?
No, Dan, I mean,
No?
and I don't say this to sound conceited. There's nothing other than the pandemic itself.
Yeah.
Nothing has fully surprised me. And thankfully, because I've made decisions based on my own advice and actually bought a lot of really good real estate investments in the last few years, did some good cash out refis. The fact that that prices are still so high, we
Yeah.
saw that coming too.
Okay.
Because you can't have a 30-year fixed mortgage product that you can refinance at any time, drop into the twos and threes, so every homeowner is able to refi their home, and then raise rates so quickly. The Fed thought they were going to squash the housing market, but they didn't squash prices. Prices, sure, they came down in the fall of
Hmm.
2022, but they started coming back up by March of 2023, really by January 2023. We saw the bottom in December 2022. And the reason we saw prices go up in 2023 is because sellers don't want to sell. Homeowners don't want to sell because they have such
They've got
low
these
interest
killer interest
rates.
rates. Right. Right. Okay.
But let's be clear, Dan, even if interest rates were lower right now, and they will get lower again, and homeowners decide, all right, I'll sell now. Homeowners are also home buyers. Nobody sells a home so that they can be homeless. When people sell a home, 9 out of 10 times, they're going to go buy their next
They're gonna
home.
go look for something else.
Yeah. So as much as each home seller puts one house into the market, they also put
So,
themselves one
mhm.
buyer into the market. So we've got this challenge now, and back to macroeconomics. In macroeconomics, you also got to look at people because people are what make the economy. We have the largest generation in our lifetimes,
Oh,
millennials,
right. The
really the
silver
largest
tsunami.
American generation ever.
Yeah.
Millennials in their 30s now, hitting first time homebuyer age, moving out of their roommate's place, moving out of their parents' place. So you got this largest generation in their 30s coinciding and crisscrossing with the lowest level of real estate construction we have ever seen in any 10-year period. When you have the
All right.
highest amount of demand intersecting with the lowest amount of supply, you're going to see prices go up no matter what happens to interest rates.
All right. Well, we can dig back into that after a break. So thanks so much. That's pretty amazing to hear about. And folks, thanks for listening. We'll be back right after these messages.